Market chaos again today. I bet you guys are tired of that. The stock market took a dive today, and absolutely the crypto market moved in tandem. Everything is on fire yet again. And why? Well, let's talk about it. Also, a popular chart analyst this morning is claiming that whales, XRP whales, just dumped 190 million XRP. Bad omen? I'm going to talk about it. XRP is $2.02 with a 24-hour low of $1.98. Here you can see things fell off a cliff starting this morning. And then you got Bitcoin at $87,213. Same story here. Fell off a cliff this morning. Dropped as low as $86,185. Crypto Fear and Greed Index, it doesn't update because it only updates once every 24 hours. It doesn't update for another roughly 2.5 hours. But we are sitting at 11 out of 100. I'll not be surprised if it's the same or lower after what we saw today. I mean, everything's on fire right now. It's just a sea of red. Take a look at this headline from Economic Times. S&P 500 crash. S&P 500 plunges 2.5% in minutes as NVIDIA rally fades and Bitcoin crashes, while U.S. stocks reversed after early gains today. Well, frankly, there aren't really any huge headlines that would be a good rationale as to why the market should be on fire today. There are, the closest you can find is this, and I looked all over because I'm always curious. Like the truth of the matter is, a lot of times, or perhaps most times, when markets move, it's just people start doing buys, sells, whatever, and if it can get too heavy in one direction, and there's not always a narrative. It's like post hoc. A lot of the times they'll tag so and so event on it, but it's an afterthought, and I see that happening all the time. And so there's nothing huge today that could have caused this, but I'm just going to tell you what I find in case you're curious what the narratives out there are. Here's one. As this is the Economic Times here. The shutdown delayed September jobs report showed 119,000 new jobs, stronger than expected. That pushed market odds of a December Federal Reserve rate cut below 40%, hurting growth stocks. Right, and so markets do want the federal funds rate to come down. That's what they want from the Fed. And if you got those particular jobs numbers a little bit stronger than expected, that makes it less likely that the Fed is going to reduce rates, which means that there's going to be less money sloshing around the economy, the global economy, frankly. I mean, I know we're talking about the United States here, but there's a global impact here. You're talking about the largest capital market on the entire damn planet. So yeah, it actually is a big deal. It actually does matter. And speculators definitely factor that in. And associated with that, a little tag along to that, this is reported by the Cabesi letter. They noted the U.S. Labor Department said the November and October employment situation will be released on December 16th. Okay. The problem with that? Right here. So you can see there's as they cite here, an economic data blackout. Why are they calling it that? Because the FOMC, Federal Open Market Committee, they're meeting on December 9th and December 10th. It's a meeting spans 2 days. And the data's not coming out until after the meeting, so they can't factor it in, which makes it even less likely that the Fed's going to cut rates. Market doesn't like that. So, and even if this is, and look, the timing doesn't perfectly line up with this, which is why I'm not 100% convinced this is it, but this is as close as you're going to get as to a reason why this happened today. But I just don't think, frankly, that it's gonna matter one way or another. Like markets have a way of working themselves out here. But we found this out today, and again, timing doesn't match up, and markets don't like this type of uncertainty. But we're going to get past this. Markets are going to rebound, and ultimately everything is going to be fine. Like it does not make sense to be flipping out here. I'm just saying. And then there's this post from Charlie Bilello. This kind of puts things in perspective. If you're freaking out, maybe don't, because this absolutely is not the end of the world. This ain't the first time we've seen a drop like this for Bitcoin in the crypto asset class and for XRP, and it will not be the last. In fact, there will be worse drops in the future. I have no doubt of that. But here, Charlie Bilello, the chief market strategist at Creative Planning, he shared this data table, and he said, at $86,000, Bitcoin is now down around 32% from its all-time high of $126,000 in early October. That's the biggest drawdown since April, but not unusual at all given its historical volatility. Yeah, and so if you're looking at the screen, you can already see here, earlier this year, we had a drawdown of 32%. Last year, from March to August, we had a drawdown of 33%. And you know what happened in 2021? Well, 2021, he's citing the end of 2021, but really November 2022 is where you had the FTX collapse. And so from that time window, that was a 78% drop. So this stuff happens, folks. It's never the end of the world, because nothing, in order for it to be the end of the world, you would have to have a fundamental shift. You would have to, in terms of the fundamental analysis of Bitcoin or XRP or crypto in general, there would have to be something that has fundamentally shifted. It hasn't. Therefore, market doesn't go to zero. It just goes down for some set amount of time, and then we rebound. Then ultimately everything's fine. I've been through this for over 8 years now. I've been through every single up and down along the way. We're just going to keep trending higher. And frankly, if you're talking about XRP, the ecosystem just keeps getting better. Do you realize that we just had the second ever spot XRP ETF launch today in the United States? The second ever US one? And it's done well. Here's a post from James Seifert. He's working over at Bloomberg doing the ETF stuff. And he wrote, with a bit over about 3 hours left, and then he corrected it later, he meant 2 hours. So with a bit over about 2 hours left in trading, Bitwise's XRP is almost at $22 million in trading today. Quite impressive for the second product to market a full week after Canary Capital's XRPC, which is the #1 launch by volume this year. So think about this. Canary Capital, they launched their XRP ETF, the ticker symbol is XRPC. That is the #1 ETF, not in crypto, but in the world, launched in the United States in 2025, out of about 900 ETFs. Canary Capital's is #1. Now, Canary Capital is a tiny firm. Bitwise is like, I think the number's like 30 times bigger. Bitwise is absolutely huge. Now, of course, Canary Capital, since they're the first mover, they stole some of that thunder, obviously. And also Bitwise launching on a day that's down in the stock market and down in crypto. So, this launch would have been more impressive on a day where it was either neutral or up a little bit. So still, to see that much money flow in on a day where everything's on fire market-wise, pretty cool to see. And so I'm just telling you, these institutions, they are planning for the future. They are not freaking out about any of this stuff. They just aren't, folks. They're not worried about this in the tiniest little baby boo bit. Here's a post from Matt Hogan. He's the CIO at Bitwise. And this morning he wrote, very excited to launch the Bitwise XRP ETF XRP. What a journey for this asset and this community. Excited to see what's next. And so just keep in mind, everybody that's building within the XRP ecosystem using XRP for anything, the fact that the market goes down does not change that. Think about every single time the market's been down since the inception of XRP over 13 years ago. Despite XRP being down an untold number of times, even the SEC lawsuit, the builders kept building, and the fundamentals for XRP only got stronger. That's happening here now too. And it couldn't be more obvious. Think about it. On a day like this, you still get another XRP ETF, spot ETF going live. This is a dream come true. Can you imagine if you could know for sure just a few years ago this would happen while the SEC was suing Ripple and attacking all XRP holders on a global scale as a result? And now here we are living this reality. And oh no, XRP fell slightly below $2. Well, I'll tell you what, I think that those of you, I know most of you were here, even a few years ago. For those of you that were here just a few years ago when XRP was like in the 30 to 40 cent range, I think you would have been thrilled to hear, whoa, we've got 2 spot XRP ETFs live, and XRP, it was on a down day when the second one launched, and XRP's down slightly below $2, but then popped back up. I think you would have been pretty thrilled about that, to find out that the $2 to $3 range is where XRP's living. It's moving sideways in that range for most of 2025. Yeah, I think you would have been really happy with that. It's reached a new plateau. And it's fantastic. You do love to see it. It's very exciting to see this. So I do not think it makes any sense to be freaking out here. And take a look at this. Now I got to address this. So here's a post from chart analyst Ali Martinez. He wrote here, 190 million XRP sold by whales in the last 48 hours. Okay, so here you can see the black line. That's the price of XRP, and this chart's going back to looks like roughly the beginning of August this year. And then what you've got up here, this gray line, it's showing the number of the amount of XRP that's worth in wallets that hold between 1 million and 10 million coins, right? And so here's the thing about this. Ali's chart actually shows the opposite of what he's claiming. It's showing an increase in institutional demand, and I want to explain how I know that. And I'm going to assume that he doesn't know that he's showing a chart that's actually proving the opposite of what he claimed in the post. I'm going to assume he's operating in good faith. I hope he's operating in good faith. The only thing is, like, I have seen him make posts like this before, and I haven't debunked his specifically on the channel before, but he keeps doing it. And the reason I'm doing it now is because he's been corrected so many times. I don't know how he couldn't have seen it. So I'd like to think he's operating in good faith, because a lot of the stuff that he puts out is pretty reasonable. But now I've seen this on more than one occasion, and I'm like, I feel inclined to respond to this on my channel, because this just isn't true. And so this is just one example, and this hasn't been live for that long. It's been live for less than 12 hours. It's already been seen 77,000 times, so that number's going to go up a lot. And that's just one post, and he keeps doing this. So first, let me point out that this chart is not counting the number of whale wallets, okay? It's showing the total combined amount of XRP that's held by all wallets that individually contain between 1 million XRP and 10 million XRP, okay? And I'm repeating that point because it's crucial that you understand that, so that the rest of what I'm about to say makes sense, okay? So when large institutions want to accumulate XRP, they don't blast, huge buy orders onto exchanges. And why? Well, that would drive the price up, right? So they'd fill some orders at whatever the current market rate is, but then they'd have to purchase some amount of XRP at a higher price, because there are a limited amount of people willing to sell their XRP on exchange for the current market rate. Now, so once you run out of those people, if you still want to buy, then you have to buy from people who are only willing to sell their XRP at a higher price. So for example, and this is just a hypothetical for descriptive purposes, if the market rate of XRP is, let's just say $2.10, all right, just making that up. If XRP is $2.10, and there are 100 people that have their XRP listed for sale at that price, what happens if a whale buys all of the XRP from those 100 people? What happens if the XRP from all of those 100 people who are selling at $2.10, what happens if that whale purchases from all of them? Because then it can't be for sale anymore, right? Well, if the whale then wants to buy more on that exchange, they can only buy the XRP that is available for sale at a higher price. And so what if the next price where XRP holders on the exchange are willing to sell, I'm just making this up, of course, let's say the next price up is $2.15 per XRP. Well, then that's the price they'd have to pay, because there's nobody offering at $2.10 anymore. But once all the people that are selling at $2.15 are also gone, then you have to buy from the next rung of people who are willing to sell their XRP at an even higher price. So, you can see how intense demand from whales would cause the price of XRP on exchanges to increase drastically, which of course is undesirable if you're the whale, right? Because the whale would rather have their full order complete at whatever the current market price is. They don't want to, fill part of the order and then have to, even though they want more XRP, they don't want to have to buy at a higher price, right? So instead of buying on exchanges, they go through OTC desks, and OTC desks, of course, stands for over the counter. They're basically off exchange liquidity providers that specialize in handling large block trades privately. Okay, so if you're a whale, you can go to an OTC firm, an OTC desk, and you can say, I want to buy this ungodly amount of XRP. It could be 50 million XRP, right? You can go to that one source, right? And then that source that you're buying from, if you're the whale, they will go find it from a bunch of different places and fulfill the order for you. So that's who whales buy from. So they don't hop on on a standard Coinbase account like you and I if they're going. If they're going to make those size of orders, nobody would reasonably do that. And so they're not going to hop on a regular Coinbase account and start making purchases like you or I would because they're whales. So they go to OTC desks. So when an OTC desk fills a large XRP buy order, the desk sources XRP directly from whales, which could be a number of sources. Like like a whale. Think about it. So like a whale is purchasing from the OTC desk, but then there are other large entities which are also whales technically that they would source it from. So it's like a whale buying from a whale, right? And that includes, of course, cryptocurrency exchanges and cryptocurrency custodians, for example. And so the trade itself, it never touches a public exchange, though. Even if some of the whales order ends up coming from an exchange, which can happen, and this is possible because exchanges themselves, of course, they hoard large quantities of XRP. So you can think about it. So Coinbase, they're holding customers' XRP, but they also have their own stash of XRP, which is very large, which they own, right? But Coinbase's own personal stash of XRP, it's not listed for sale if you hop on, if you hop on Coinbase as a Coinbase customer, for example. It's not just sitting there, so you can select it. You can just choose to purchase that. So Coinbase, they can sell part of their XRP hoard privately, and no one would know about it publicly because no buy order appears on the open market. That's why the visible market price, it doesn't move, even though real demand is being absorbed behind the scenes. So you can have very large amounts of XRP being accumulated, but the price chart barely reacts in real time because the transactions happen off book, right? Happen away from the exchanges that set the displayed market price. So in other words, OTC buying, it hides the true demand until later. And that's why major institutional accumulation, it doesn't show up immediately as a price spike, right? So if an OTC desk pulls, say, 20 or 50 million XRP from a whale wallet to fill institutional orders, that whale wallet's balance, it drops, okay? But none of that XRP was sold on exchanges. It was simply redistributed directly to buyers behind the scenes, okay? And so I had to say all of that so we could get to the key point here, right? And here's the part that matters, okay? This is the part that makes Ali Martinez's assertion that whales are selling absolutely incorrect. When those institutions receive the XRP, they typically store it in wallets that already have very large amounts of XRP, above 10 million XRP. It could be 20 million XRP. It could be 50 million XRP, for example. Or it could end up being stored in smaller XRP accounts below 1 million XRP. So in either case, those holdings drop out of the 1 to 10 million XRP range entirely. And that's what I cited right here. If you're looking at the screen, the top left, Ali Martinez is citing that range. That's a bucket of 1 million to 10 million XRP. Okay? And so it can fall below that or above it. Doesn't mean that a bunch of XRP is getting dumped by whales, though. So again, look at his chart. Again, I'll say it again. The chart shows an XRP whale range of between 1 million and 10 million. So think about it. This means a whale could come along, place an order for a ton of XRP, and some of it comes from an account with 1 million XRP, which causes that wallet size to drop below 1 million XRP, right? It could drop below 1 million XRP, showing there are now fewer XRP whales holding that 1 million to 10 million range. Because of demand, not because of selling, but because of demand. Because of buying, okay? Now imagine that XRP, which was just purchased by the whale, ends up being transferred to an account that holds 20 million XRP. So Ali's chart, it'll show a decline in that instance, but the real story is that demand was so strong, whales drained the supply. So the metric he's showing here, yeah, it's going down, But not because whales are dumping into the market, but because institutions are quietly absorbing XRP through off-exchange channels. Duh. I mean, think about it. If instead whales were dumping that much XRP on exchanges, it would push the price of XRP down. I mean, but over that time period, the price has basically been ranging sideways, more or less, moving up and down in tandem with the rest of the crypto market. And so that's why chart analyst Ellie Martinez is unquestionably wrong in his assertion that the chart indicates whales sold 190 million XRP in 48 hours. It just didn't happen. Which isn't to say that there couldn't have been some large entities that are selling. What I'm telling you is that is not what this data shows. It just isn't. It's a virtual certainty, since you didn't see the price drop. If you see that bucket fall, it's going somewhere else. It's just being redistributed. OTC purchases, my friends. That his chart is not showing what he's saying. It shows. All it shows is that XRP moved. That is what this chart shows. It doesn't say move to where or why. But then, if you think about it, which is why I took all of the time going through it I just went through, that's the only rational conclusion, obviously. But there is no justification whatsoever for this being some sort of indication that there's a bunch of whales selling. Because again, over that 48-hour period, XRP is just moving sideways with the rest of the market. Everything's fine. And now we've got Bitcoin. It's rebounded a little bit. $87,588 as I wrap up the video. XRP at $2.03. Look, I don't know where the market bottoms. I don't know how low this thing's going to go. It's not the end of the world. Sleep easy. Look, I've been through too much of this. I was here when XRP dropped to 10 cents. I was here, and that was before the lawsuit. I was here through the lawsuit when XRP dropped back down to 16 cents. There have been so many worse situations. I'm telling you, XRP's fundamentals have never been stronger. And if you're like me and you understand that utility matters and will win the day. I mean, that's the core of my investment thesis anyway. And if you understand that XRP's fundamentals have never been stronger, and if you have a sufficiently long time horizon, which is to say whatever the hell it takes because you don't control it, then everything's fine. You don't control when the market pops, but you do control whether or not you have exposure to XRP when it invariably happens. And that's the game. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea.